I'm Gwen Preston of Resource Maven with a look at gold and its lack of leverage. So the world has really been a bit of a crazy place lately. We've had really intense, significant geopolitics, along with, of course, US domestic turmoil, and some questions about the strength of the market, especially in terms of its breadth. Amidst all of that, gold has done really well. In fact, over the last 6 weeks, gold is up 6.5%, which is a pretty impressive run. Investors are turning to the yellow metal for classic reasons in the face of geopolitical and economic risk. Seasonal factors are also helping. Late summer and early fall is always a strong seasonal time for gold. What we're still lacking, though, is leverage from mining stocks. Usually miners gain and, of course, fall in multiples of the gold price move. It makes sense. A miner's costs are generally pretty fixed, so changes in the gold price translate directly into increased or decreased profits. Example, if miner X can produce gold at $1,000 an ounce and the price of gold goes from $1,200 to $1,250, then the miner's profit margin goes from $200 to $250. That means that the miner's profitability increases 25% when the gold price only moved 4%. That's why leverage exists, but it isn't apparent right now. Miners are sort of just moving with gold instead of levering off of it. What gives? Well, I think what's going on is the market is not yet convinced that gold's moves are sustainable. Gold's move in the last 6 weeks still sort of keeps it in that range, in that space that it has been for most of the bull market for the last 18 months. I mean, it has moved up and down out of that range a little bit, but in general, it is stuck in this sort of 1,200 to 1,280 range. And therefore, people are lacking conviction that this move is the start of another real leg up in the market. So what's going to change? Well, at some point, gold is going to make a move. It's either going to move up or down. I think up. If that happens, if gold breaks through $1,300, that will be a very significant momentum changer in the market. I think investors who have been interested in gold but have been waiting for some sort of confirmation of the continuation of the bull market will enter again, confident that this is the next step up. And I think what would happen there is that mining shares will suddenly regain the losses that suddenly take the losses or the moves that they haven't been making. That leverage will suddenly reemerge when gold moves with conviction above $1,300. Of course, the opposite is also possible. Gold could not move above $1,300. Whether it falls significantly or whether it stays within this range, very difficult to know. Depends on everything from central bank movements to the broad stock market. That said, gold has shown really good sticking power in this range. There's no real reason to think that it's going to drop below this range. So it's really a matter of time when gold makes that move, when it decidedly moves up above this resistance that it's hit at $1,300. Mining shares will likely give you all of that leverage that has been lacking now for quite some time. It's not just the last 6 months. The lack has been for quite a long time now. So it's a really important move. If gold makes this next leg up, mining shares are going to lever that move in a really major way.